Hello and welcome back viewers, this is Nifty Crore. You're watching the Savera. A major shake-up in the banking sector. IndusInd Bank has been hit by a storm as its stock plunged 20% in a single day, wiping out a staggering 14,000 crore in market value. The reason? A shocking financial irregularity in its derivatives portfolio, spanning over 5 to 7 years. What went wrong? And what does this mean for investors and the banking industry? Let's break it down word by word. IndusInd Bank shares hit the lower circuit on Tuesday, tumbling to a 52-week low of 720.35 rupees. This sharp fall came after an internal review exposed discrepancies in its financial records, specifically in its derivatives portfolio. These discrepancies will impact the bank's net worth by 2.35%, translating into a whopping 2,100 crore loss. But how did this happen? For years, these discrepancies went unnoticed, quietly accumulating in the bank's books. It was only after an internal review that the bank realized its derivatives accounting had significant errors. Derivatives, for those unfamiliar, are complex financial instruments used for trading and managing risks. If not handled carefully, they can lead to serious financial trouble, as seen here. Now, with these errors exposed, the bank must absorb the loss, either in its upcoming QR earnings report or in the next financial year 26. IndusInd Bank is promoted by the Hinduja Group, a multinational conglomerate with significant influence in the banking sector. This adds another layer of concern as investors now wonder whether the group's leadership will take corrective measures to restore confidence in the bank's financial integrity. This discovery has also cast a shadow over the bank's leadership. The Reserve Bank of India recently extended CEO Sumant Katpalia's tenure for only 1 year, a decision that many now believe was influenced by these hidden financial irregularities. The bank's board will now have to evaluate new leadership considering both internal and external candidates. Citi has called this a litmus test for IndusInd Bank's succession planning, highlighting the urgent need for strong and stable leadership amid this crisis. Could this be a sign of deeper concerns with the bank's management? As expected, the stock market reacted sharply. Several brokerage firms slashed their target price for IndusInd Bank's shares. Prabhudas Leeladhar, a leading financial research firm, downgraded the stock from a buy to a hold rating, warning investors about uncertainties in earnings and leadership. Their revised stock target, 1,000 instead of 1,400 rupees, with the valuation now at 0.9x on financial year 27 ABV, down from 1.4x earlier. Now what about the future? The RBI has tightened its grip on financial reporting, ensuring that from April 1st, 2024, no such irregularities continued. But this happened. The bank has also appointed an external agency now to independently review and validate its internal findings, in compliance with RBI's September 2023 guidelines on bond investment classification and valuation. But for investors, the damage is already done. The bank's credibility has taken a major hit, and borrowing costs could rise as a result now. This brings us to the big question. Can IndusInd Bank rebuild investor trust, or is this just the beginning of a deeper trouble? And more importantly, if such irregularities could go unnoticed for years, how many more hidden financial skeletons are waiting to be uncovered in the banking industry? We leave you with that thought. Stay tuned for further updates only at The Savera. Subscribe to our Facebook, YouTube, Twitter and Instagram handle, and don't forget to download the Savera app.